Welcome to the AlphaMind Podcast. Unlike most of our episodes that feature seasoned or well-known traders with decades of experience behind them, today we are delighted to speak with Blayn Marshall, someone who's still in the very early stages of his trading journey and is close to navigating some of the initial challenges and lessons that come with it. It's also interesting for us to speak to somebody who is, unlike, again, many of our guests, seasoned and experienced and started in a different era. Blayn is someone who started in the 2020s, which is a very different environment, one shaped by the technological advances of the last couple of decades, and has many resources that many of us older traders certainly never had available. So the opportunities, the tools, and the access to information available today is very different. So it would be great to hear a different perspective from people, and I hope this will be useful for both older traders who want to perhaps challenge themselves a little bit to understand more about what the tools available and the way it can be done, and also to younger traders also themselves starting out. But first, a quick thank you to our long-term podcast partner, the Society of Technical Analysts, the STA, who provide brilliant educational and membership services to traders and analysts and people across financial markets. One of the things we try to actively promote on their behalf is their brilliant home study course, which provides a really thorough and detailed insight into technical analysis and price action and the various components that go into that, far deeper than people will get from any other resource. And this course has actually been put together by many of the world's leading technical analysts. And if you want, you can go on to take a diploma in technical analysis with the STA. So we're delighted as a partner of the STA to offer this course with a slight discount. You can find out more about that by going to the AlphaMind website, alpha-mind.net, and also you can go to the STA website to find out more about their services, technicalanalysts.com. Now, on with this week's podcast. So, welcome to this week's AlphaMind Podcast, episode 149. Today it's just me as the host by myself. Mark can't be with us today, but hopefully it's going to be a super episode. We're delighted to have a guest with us who's at the younger end of the spectrum amongst some of our recent episodes, Blayn Marshall, who is a young trader from Scotland. He's 28 years of age, and it's going to be really interesting for us because us old boys, we can get caught up sometimes in, thinking about trading through the lens of the way we used to do it in the past. But of course, here we are in 2025. It's a very different age, a very different set of tools and analytical techniques have changed. And, the availability of what people have now is very different. And the culture of trading is very different. And it has attracted a lot of young people to it who are keen to work for themselves, develop their own path, and kind of have the freedom and independence that potentially trading could bring. So it's going to be great to hear from Blayn. So welcome, Blayn, to the AlphaMind Podcast.
Thanks for having me on. I'm really excited to be here.
Brilliant. Blayn, maybe you can start by just sharing your story, your journey into trading, a little bit about your background with our audience, so they've got some kind of context as to where we're going with this.
Yeah, so I got started off actually investing to begin with when I was at a young age of 18 because my dad actually told me that, if you learn how to play the stock market right from a younger age, you can retire quite well. So my journey started there while I was at university, and I predominantly just researched stocks initially. Just bought stocks and would hold them if I felt that they were good companies. I bought companies that I knew from sort of like my interests. So like one of my first stocks was actually Gfinity, which was a gaming stock. And it pumped like 100%, and I didn't know what to do. So I held it, and then it went back down, and I was back at about break even within about probably the space of like 2-3 weeks, and I sold out of that. So I realized that I needed to do something different. You know, I had no strategy. I just bought stocks just because when you're taught if you buy stocks and just hold, some of them will work out. So I done that for like a couple of years and never really come across trading until I was actually when I was doing my dissertation at university. I was doing engineering at university. Um, One of the research that I was looking into, because I was doing cylinder structures, like wave forces on cylinder structures. So you use something called what's classed as a CFD for sort of like research analysis on this. And I come across contracts for difference instead of what I was actually meant to be um, researching. So I was like, okay, what is this all about? And from there, I come across Elliott wave theory. So completely off topic to the task at hand I was meant to be doing. And yeah, from there I was kind of hooked and kind of stopped focusing on my degree. I finished it, but I was kind of like interested into how people were trading markets using like analysis of waves. So I think it was literally like 2 months later, I opened my first account and just started trading, just the waves, looking at charts and just trading waves. And it was good to begin with. It was doing well, but I don't know what a stop loss was. I just kind of took profits when I felt like the wave was over. And I think I like doubled the account within a couple of months, but naturally you're over leveraging because I had no idea about any of this. And then there was one day a bit of news come out against the pound dollar, and my account crashed. I lost all the gains, and at that point, shut the position and never sort of traded again until I could figure out, okay, I need to figure out a strategy around this. I need to figure out how can I manage risk as such. And I went through like multiple years of like looking through communities, online sourcing, and just YouTube, just the general sort of like retail route as it is in the modern day. And yeah, had a good couple of strategies that I ran live, and since then I've moved into the automation space.
Okay, terrific. And it's I think your journey is quite interesting because it's not uncommon. People find something, they chance across trading or they hear about it from someone. They give it a try. They make some money, so they get hooked. It's interesting. Okay, yeah. It's different. It's exciting, and the market does that thing where it kind of sucks you in as well. It shows you some profit, often quite quickly, and you're like, oh, this is great. And then it comes and takes it all away from you.
Yeah,
very quickly as well.
Every time.
You're baffled, but then you're often hooked, and then like you say, you go, okay, this is amazing. You're probably coming across other people that are telling you how much they're making, and you're seeing certain names that are jumping up, and they're making a lot of money, and they've got a great living, and they're working from home or a private office, and they have a great life, or seems a great life, because they're doing something that's fascinating and fun. Okay. Yeah. And they're doing it for themselves, and they're not working for a big corporate, no one to answer to, which is attractive as well. You're your own boss at a young age, and and you can turn it off if you want and just go traveling. So and then come back and start again.
Yeah,
and that's appealing.
Yeah, it's definitely different to 99.9% of things in the world.
Yeah. Okay. So, what was when you got into it a little bit more? Tell us a little bit about how you started developing your process. What was important for you, or what did you learn very early on that really? I mean, you're very clever in how you sort of picked up on this idea of developing strategies and a risk process and realizing it's necessary. But was there anything that was really key for you in those early days?
So, to be fair, there was lots of things that were key. Strategy development is one thing, but everyone eventually can do strategy development. But It was managing risk. One thing that you're like, if you like most things that people say is risk 1% per trade, and for me that was okay. But when you had lots of trades on, like there was no sort of like set number of trades. Like I could have 10 positions open and almost 10% of my account like at risk, and some of the swings were for me personally like pretty crazy. So from a mindset perspective, it was challenging at times. You can go through good periods and you feel sort of like euphoric, and 2 weeks later you could lose it all again. So definitely, like initially, like I was struggling with just handling risk, and also like sort of like a discretionary like trading approach. I eventually like made a set of mechanical rules to trade. That was obviously like about 3 or 4 years ago, and I followed those rules, and it actually took a lot of the sort of like discretion element away and made it easier from like a mindset perspective. So one thing that I did was, because I was getting successes, I was scaling up the account fairly fast. And within a year, like I managed to get within just over six figures in terms of my account size. But everything was going well. Like it was a crazy good period for me. And as I scaled in, I had my first really bad month. And I say really bad month, it's not like terrible. But from a mindset perspective, it completely like floored me. So I was up about 60% for the year, and then I had my first like 10% drawdown that happened literally over 5 days.
At this part of the podcast, we had a minor technical fail with Blayns' audio, so we had to go to a different microphone. So if you hear a slightly different tone now to Blayns' recording, that is why it is.
So I had like my first bad month, which wasn't actually like a terrible drawdown in terms of numbers, but because I scaled up the account like so much, like I probably had like a 10 grand loss over the course of like 5 days, which when you're working a part-time job to like kind of like cover your living costs, like it was a crazy amount of money to just kind of see disappear in such a short space of time. So like it totally like changed everything for me at that point. Like I actually stopped trading for like literally a month after that, because mentally I just like couldn't really handle the loss at that time. When you're winning, everything seems good, but when you have your first losing period, that's never really truly happened in terms of monetary value. That really hurt the mind. Let's put it that way.
Yeah, I like that word there that you just used, hurt the mind, because as you know that the mind is our core focus on this show, and
Yeah.
The mind connected to trading, and the management of the mind is not done enough, in my opinion. And I didn't do it when I was a trader until much later on in my career. We have to manage the person. The person doing the trading is us.
Yeah.
The person getting hurt is us. And when we get hurt, our mind goes to a shift and goes to certain places that may not always be productive. Equally, fear of getting hurt is also a problem.
Yeah.
It throws us off from process. But so you took about a month off after that, and then what kind of happened? What was going through your mind at that point?
Just how can I get to a place where I can start trading again and actually feel comfortable with losses? In the early stages, you're always focused on the strategy development part. And one thing that I've found over the years from trading is it's never normally the strategy development part. It's how can you handle risk? How can, just handle risk for yourself, So from that point, like I just done some research on mindset. And that's actually when I come across your podcast, naturally, as a top trading podcast, or psychology or mindset podcast, and listened to a couple of episodes. And there was one where someone was speaking, and it was about Stoicism. And I really liked that episode. I can't remember the guy's name that was on it because it was quite a few years ago. But
from there, like I started like studying a bit into Stoicism because I like the whole approach of that sort of like mindset. So one of my favorite books that I read was Marcus Aurelius's Meditations, and it's very interesting read that I think everyone should actually definitely take the time to read, because it's just crazy to see how he was thinking and processing things as in like a journal sort of perspective. And from that point, just reading how, you can't really change the outcomes, but you can control the actions that you take, essentially. So yeah, I read that book, which was great, which was a good lead on to Trading in the Zone. And from there, I got to really understand who I was in terms of like how I handle risk, and how I can design things to sort of like meet the need of how I am, and what doesn't, to not exactly affect my psychology as a trader, if that makes sense. So there was a lot of trial and error and different things. And that's actually one of the reasons that I got into automated trading, just to kind of fit that narrative of, I can control the systems that I build, but when I put them on live, I stay hands off, and I let the outcomes sort of like dictate I let the system dictate the outcomes. And that really did help me mentally, from a perspective of, one of the things I think I struggled with is you're constantly looking at the P&L, when you're managing positions, right?
Yes.
And I don't think it's said enough to, that really does affect you mentally, just looking at numbers go up and down. So taking that away from me, where I would just let the systems run, as long as it was doing everything correct, I would just let it go. And because you're not managing the positions actively, just taking that, constantly looking at your phone or your MetaTrader, looking at the P&L really did help as well.
Yeah, I think the episode you're probably talking about was the one we did with Ben Aldridge, and he wrote a book on how to be comfortable with being uncomfortable.
Yeah,
which is kind of the very essence of what happens when you're trading. And he talked a lot about developing a Stoic philosophy to life, and cultivating a growth mindset, and dealing with embarrassment and shame and things such as that. And what I think you're talking about here is something that we talked about a lot, which is trying to lessen the ties with your outcome, trying to not be outcome focused, but try and be process focused.
Yeah.
The problem is when you look at your P&L, it immediately takes you back to thinking about the outcome.
Yeah.
And I've tried to create mind hacks where I tell people, that P&L number is an imposter. It's not real. Okay. It's not who you are. It's not going to be there tomorrow. It could be higher and lower. Okay. You could be at all-time highs, but the chances are at some point you're going to be a bit lower than that, or a bit higher than that.
Yeah.
Okay. So it's trying to break this connection between the number and the work, the process, because it's a process that delivers, and it's the focus on the outcome that often corrupts.
Yeah, I'd agree with that.
But trying to break that is so difficult because we're so deeply connected to it.
Yeah.
We have been all our life.
Yep, exactly. And then when you do your back test and that, you're quite focused on the outcome when you do the test, and you think you've got something that's really good as well. So that that's one of the things that I don't think enough people do as well. You do a back test, right, essentially, and you look at what could happen, essentially, right? But what you don't look at is the noise that goes in between. And that's one of the things that I like. You're again, when you're doing back tests, you're focused on the actual outcome. What result did I get? But what you don't notice on is the stagnation periods, the drawdown periods throughout that sort of like cycle. And I think that's one of the things that I would say most people do struggle with, essentially.
Yeah. I always suggest if you do a back test, don't just look at the results and the data and the numbers that come out from it, but actually try and walk through it. Try and go back to the beginning of the back test. Try and expand it out and go through the days and the weeks and where the markets were, and walk through what it would be like, okay, to have that huge drawdown.
Yeah.
which is going to come along. Or try and imagine what it's going to feel like when you make a load of money. What's that going to do? Are you going to want to double your amount, which is usually the worst thing you can ever do at that point? And also going through that walkthrough can alert you to what is possible.
Yeah, definitely. I mean, one thing that I overlooked early doors was I knew what my max drawdown is, but I didn't know how long I'd be in drawdown for. So the stagnation period is where, that's one thing that I do look at whenever I do some testings is, okay, what's realistic? Like when you're doing a test, it can be over and done with pretty quickly. But if you look at the actual day-to-day, it could be quite a long time. That feels like a long time. Over the long run, it's not, but it could feel a long time. And that's the areas that I focus on. Just because from a psychology point of view or, mindsets, those periods are going to be tough and you just got to roll with it.
Yeah, it's actually helpful to look at the kind of the sort of regression line, the mean line through the middle of it, and to try and think of that as your real P&L.
Yeah.
Rather than the when it moves to an all-time high. Because hopefully, it's that mean line which is what you're aiming for over time with a system.
Yeah.
Also, it's good to look at it and say, well, okay, it's gonna have periods where it doesn't perform, and actually I've got to expect that and not get upset when it happens. And you make it upset still, but at least you can break it a little bit if you remind yourself that this is just the pathway towards strong performance.
Yeah, definitely.
We'll return to the podcast in a moment, but first, are you a struggling trader facing internal doubts amid the ongoing market volatility and the pressures that go with trading? Last year, I published my first book, Mastering the Mental Game of Trading, a powerful guide to help you sharpen your performance by conquering and winning the internal battles that influence your trading and your trading decisions and the way you manage risk as you are engaging with those external market forces. Mastering the Mental Game of Trading is available in paperback, Kindle and Audible from all major online book retailers. This is a chance to take back control of your trading mindset and unlock your true potential as you engage with the markets. Now let's return to the podcast. I love this kind of this focus on stoicism and how it helped you reshape your mindset. And I know a lot of people do talk about it, but they don't really do much about it. So can you tell us a little bit more about how you've managed to sort of, what have you done within your process that sort of to bring that philosophy of stoicism into how you are, how you turn up at the market, how you approach things, how you deal with things?
Yeah, I mean, the main way that I approach it is, I know my data as such. I know I know what sort of is going into the system as such, but I just kind of let it control the outcome and manage it accordingly. Now, one of the things that I changed was how much I risk. If you're risking higher, you've got to react quicker, which again can negatively affect the mindset naturally. So, I mean, because I'm now fully automated in the way that I trade, I just let it do what it needs to do and disconnect that way from the market as such. I build, I control I control everything that goes in, but I can't control what comes out exactly. So I understand that sort of part of the aspect of trading now with the way that, I'm thinking and trading now.
Right. Okay. And is there anything that you can recommend about this to other people who are listening of how to really start, sort of becoming more engaged with this concept?
I mean, there's so many things you can do. If you're struggling, I would definitely recommend listening to any sort of podcast that's within this sort of area of philosophy, and really try and see where it could fit into how you are as a trader, because naturally everyone's slightly different in how they would interpret certain things, and what they could add to their mindset is totally different. So, I mean, I guess it's just kind of take it as how you would interpret it and try fit it into you as a person, if that makes sense.
Yeah. Okay. So this took you on a journey in towards, it sounds like, systematic trading or algorithmic trading and developing trading systems. What were the other influences for that?
To get into systematic trading, again, just following on the philosophy of just kind of stepping away, kind of detaching from being involved in the market myself naturally, to allow the actual outcomes that I've tested and built to actually realize, if that makes sense. That's pretty much, that was pretty much my main reason to going into systematic and automated trading, just to kind of take me away from the actual intervening, you letting my sort of psychology and the way that I interpret the market, if you're down a position, taking me away from that sort of screen where the P&L is there, that I could close out a position just based on my emotions, if that makes sense.
Okay. And how did your engineering background play into that?
So the engineering background definitely helped in the way that I analyze the market and construct these systems. But engineering did not teach anything to do with mindset when developing or trading.
Okay. But I mean, it's one of those, engineering is one of those fields which seems to bring a lot of people to trading. I've done a lot of work over the years and worked with many traders who are from an engineering background.
Yeah.
And it's, it's almost like the puzzle of the market, and trying to solve the markets in some way seems to fit that challenge of being with something which draws them towards engineering to start with. Yeah,
I mean, what I liked doing when I was doing engineering was design engineering, which is building structures on CAD. And I see this as very similar in an alternative, but in, a different field as such. I like building and testing things.
Yeah.
And naturally, that's how, I've just constantly built and tested systems. So engineering did have a massive influence, I would say, on this that I never thought would.
Yeah. Well, I mean, one of my clients said to me that, he felt, or his colleagues noticed, that rather than just come up with an idea, he spent a lot of time trying to disprove ideas. And that kind of left him with the kind of ones that worked. He'd realized that his engineering training was very much part of that, how you thought about things.
Yeah.
Almost reverse testing things at times.
Yeah, well, that's definitely an element of it. There's so many systems sort of out there on the marketplace, research papers, everything. And, as an engineer, as you were mentioning, it's good to test these things to prove if they do work or don't work. And that's part of my everyday process, to be honest.
Okay. And you've mentioned to me about, that you like to do Monte Carlo simulations.
Yes.
As part of helping you understand the nature of randomness that's going on in the markets. I'm sure a lot of our audience would love to know more about that. Are you able to sort of divulge some information on that?
Yeah, so one of the things that when I first got into automated trading, I tried to use all the tools possible to make robust sort of systems. And that's when I come across Monte Carlo analysis that I'd never heard in my life. And when I did, I then took all my old data and even broker statements from the previous 3 or 4 years and chucked them into this to see how different and how crazy, like the difference, sort of randomness, all these strategies that I was trading and even, it was having. And what I found the craziest part was, whenever I was building a strategy, I'd say, okay, this system's got a max drawdown of 10%. When in actual fact, when you stick something like that into Monte Carlo, you can see that it could be completely different based on sequence and randomness. This really did sort of shift the way that I traded a lot, actually. Because when I looked at it and I could see that, one system would say 15% drawdown, another test would say 20% drawdown. Naturally, I was thinking, okay, could I actually handle that extra 5% drawdown? Or what is a way of actually reducing the drawdown so then it doesn't have an ongoing effect to my mindset as such? And then that's when I started like doing a lot more reduced risk systems and putting a lot of them together. So then what that actually created for me was, if, say, a system was not doing so well, I would have a long time to be able to adjust and make changes to these systems because I can think freely and I'm not going through huge drawdowns. Whereas if you're going through bigger drawdowns, you need to react quickly and you don't have the time to think sometimes. That's how I would interpret it. So Monte Carlo really helped me to understand randomness in these systems and how I could reduce the risk, but also give me more time to react to certain situations, to let my mind actually make a good judgment call. Time to think, analyze things, and make a good decision.
Okay, so what part of the system building process for you is discretionary, and what part of your trading now is non-discretionary, or is that not a sort of good way to describe them in binary terms?
All my systems, I don't have any discretion to the systems at all now.
Right. What about the design of them, though?
So the designs will just be based on what I think is a good system or good entry model, and then I build them around different filtrations, and I make sure that they are robust enough. So one of the iterations that I have in the way that, and this will be my engineering background, I have a thing that I test called a factor of safety, which is a robustness check that I've created as such. And the way that it handles is I'll test multiple different outcomes, or say stop loss, take profit, whatever it is, and make sure that it works in a very wide range of either markets or range of stop loss things, and make sure that it's robust, that it's not just cherry picking a single strategy that is only perfect for that certain condition, because we know that the markets are quite erratic. They move, change cycles, and that's one of the things that I've really focused on, to make sure that the systems that I'm creating have the best possible chance in the long run from a robustness standpoint, but also can work together with loads of other systems in a low risk. So then I can actually, if I need to make any changes, I am very level-headed and not worried too much, because I know I have time to change these things.
Okay, and how many systems roughly are you running at any one time?
So one of my main portfolios, I have just over 20 systems running.
Yeah.
And I'm trying to build more bigger ones that are a lot more uncorrelated. So constantly building and applying these systems to the charts.
Okay, and how many different markets? I mean, is this across all markets, or do you have a favorite set of markets? Or
it's across multiple different currencies. It's across energies, commodities, indices, mostly.
Right. Okay. And in terms of, do you ever let systems go or leave some behind because they seem to be struggling or failing to meet the backtest criteria?
Yeah. So obviously, naturally, I'll run some forward tests to make sure that the systems are not, as you would say, over-optimized as such, and they are continuing to do what they're meant to do. And I'll continuously review them every month, backtest against them to make sure that they are going in line with what they're meant to be doing. But just risking such low amounts, even if a system is failing in the short term, you don't necessarily need to turn it off if it has performed in the past.
Right.
It's just the way that I run things.
And what are some of the dangers that you've come across when you're doing this? That you've suddenly it's occurred to you and you've realised, and you're learning as you go along. But what are some of the things that have occurred to you in this time?
Yeah, so I would say one of the dangers that some people might come across when they step into this sort of field is, I'll give an example that, you could be trading purely breakout systems, and you'll find that certain markets will be perfect for this. And you just constantly keep building breakout system upon breakout system upon breakout system on the same market. And what this will do is it'll overexpose yourself to essentially one side of the market sometimes. And that is one of the dangers that you could have. You could have overexposure just to one side, essentially. And yeah, that's probably one of the main ones that I've come across as such at the moment.
Right. Okay. What about curve fitting? Is there any danger there at all that you've come across with that?
Yeah, of course. There, in my early stages, some of the systems I built, I felt were curve fitted, but this is where you've got to figure out a sort of like playbook as such when you're building these systems that like I put like so many like rules in place to make sure that they pass what I class as my factor of safety robustness test, and this makes sure that there is as little, if not no, curve fitting as possible, because you could easily dive into algorithmic trading and curve fit a perfect system on paper, and then you turn it on, and straight away it's just going to be continuous losses.
Yeah, yeah. And you talk about sort of breakout systems, but are there a category of different types of systems? So, when you're talking about styles, so for example, you said breakout systems. What are some of the other styles of systems that or do you not really label them in any categories?
I mean, I would just stick it to mean reversion, breakout, and trend following. To be honest, I would just keep it simple as that. Well, seasonality is another one, but yeah, just those sort of four is where my main roots are at the moment.
And do you ever find that they're just offsetting each other, or they're sometimes moving in the same sort of, you've got a perfect alignment where something's mean reverting and it's brought up a kind of breakout at the same time. And how do you stop it over positioning and things like that?
Yeah, so I guess that's part of the game when you're constructing a portfolio as such, to kind of essentially figure out how correlated. Let's say you've built a mean reversion as well as a breakout system on the certain pair. It's very worthwhile looking at how correlated it is, looking at the individual periods of when they're both trading at the same time to make sure that you're not sort of, how would you say it, creating like a net zero effect, if that makes sense, in those sort of markets.
Yeah. No, it can do that. So I mean, this is again, it's a great journey for you. You're still quite young in this. Were there any good books you read on this in your time that sort of other people could really learn about this?
I mean, there is definitely a lot of books out there. In terms of like building algorithms, you've got Kevin Davey, who's got quite a lot of good ones. Brent Penfold, and then for mindset, like anything to do with Stoicism, to be honest, as well as trading in the zone, is the ones that I've kind of stayed within. I mostly what I do is I just listen to podcasts so I can learn as much as I can from some of the best traders.
Right. Okay. And so you're not using any discretion anymore in your trading?
No discretion at all. No.
And what is the path forward for you from here?
It's just to continue this journey of building as many systems as I can to make sure that I'm building as uncorrelated portfolios as possible, so then I'm going as long as I can, so I can go as long as some of the guests that you've had on, essentially. But it would be nice to essentially like build my own sort of like fund going forward, if that makes sense, naturally.
Yeah. No, I think that would be brilliant. And, and are there any avenues that, sort of that you haven't considered yet that you're thinking, well, this could be an interesting sort of direction to go?
Apart from looking at just building a sort of like hedge fund as such, not really thought of anything too much because I'm just so focused on just building as many systems as possible.
Yeah. No, I should imagine that there's a bandwidth limitation, I guess. What about forums? I mean, are you joining forums? Are there sort of communities that you could belong to of system builders and runners?
I think there is a forum that I'm part of. I'm not really too active within these forums as such, and it's mainly just because I give myself like so many systems that I have to build and test in a day, and I kind of devote my sort of time just to build and test and portfolio construction. But anyone can reach out to me on Discord if they have my Discord. And I'm always open to chatting to any aspiring traders or, current traders as well.
Okay, well, we'll put all those details on the notes. So if you're listening to this and want to get those details, just go and check out the notes for this episode. We will return to this podcast shortly. Just a quick reminder about our podcast sponsor, the Society of Technical Analysts, a brilliant organisation which help traders and analysts from across the spectrum of markets. They have many fantastic programs, including the new Technical to Trading System program. Also, do check out their brilliant home study course, and AlphaMind listeners can get a discount on that. Just go to our website, alpha-mind.net, to find out more about that. You can find out more about the Society of Technical Analysts by going to their website, technicalanalysts.com. Now back to the podcast. One of the things that I'm curious about is how do you, I mean, if you sort of, I don't know, just take a couple of weeks off from system building, clear your head, and then sort of conceptualize or come up with an idea for a new system, where does that come from? Where does it start?
I mean, to be honest, it's just sort of like it's quite a tough question actually, because I don't know how to best describe it. I mean, naturally, if I had to take time off away, sorry, 2 seconds.
That's okay, but you're probably in a certain flow most of the time, so you've probably got a lot of things going, and I should imagine one triggers the other. But I'm asking this really again for the audience, for people who might be sort of out there thinking, well, where do I even start here? Okay, how do I start coming up with an idea? What is the way forward? For someone who's never done it before, and just sort of maybe using yourself here as an example. If you was to just begin, go back to almost restart again. And okay, you got stuff working. You say, okay, I want to conceptualize a new system. I want to come up with something that. Does it just come to you? Is there, are you watching markets? You're thinking, that's interesting, let's test that. Where does it come from? Is there some technical analysis going on? And you think that I love that particular sort of pattern or formation or price action. I wonder if we test it back, what does it do? What is it? Just sort of, there must be a starting point, a sort of genesis of each system.
Yeah, I mean, naturally, from trading so actively, you can pick up on just the general basic chart patterns that you would normally start with as a good starting point. And from there, I've read like lots of good sources online for strategy ideas. I think one's called Oxford Strat. I think it's called it back in the day. They've got almost 50 strategies that you could essentially just pull from that are strategies that have worked in the past. Any sort of book that traders are putting systems in, that's why I mentioned Brent Penfold and Kevin Davey, because for starting points, they were very good for me to actually build some basic systems initially. And you just want to build foundation of basic systems to begin with. You get used to it, and then you just kind of read loads of research papers. There's lots of websites out there. There's constant publications of research, analysis of what they've found, and trading ideas that might not be the market that you're looking for. There's a lot of stuff on commodities, the way that people traded commodities back in the day, that you can really pull any idea, simple idea from that, even if it's just the entry criteria, test it. What I do is I watch the tape. I watch as it's tested. Try and see if I can notice anything that's commonly occurring and try and really analyze that market to how the entry is and build a narrative around it. So there is an element of taking someone else's entry essentially from a paper and then watching the charts to see if you can notice something common occurring that you could maybe make a rule from essentially.
Right. Okay. And then what systems do you run that through from then onwards to test it?
So I would build these systems and code them, and then what I would do is I would put it into MetaTrader 5, and from there, I would then test the entry against historic back-tested data all the way back to like 2003. And then from that point, test loads of different stop losses, take profits, management styles, and really crunch the data, because it's all about an algorithmic trade. It's all about crunching the data and finding those sort of robust systems in that way.
I wish I was young again. Do you know what? I look back to the day when, we didn't have all this technology and resources that you have. Back in the 90s, I was testing trading systems, building, coming up with ideas. And I had to download the data almost manually. I had to copy it by hand into an Excel spreadsheet.
Wow.
And then I had to come up with, I wasn't even using Visual Basic. I was just using Basic, just the sort of creating formulas on Excel. And that was basically it in those days, unless you were really computer savvy, which many people weren't. And I ran these tests, and of course I had to clean the data up myself. I had to often adjust the data because there would be rollovers on contracts, because a lot of them were futures contracts. I had to get rid of gaps. And then there was no sort of even the data was largely visual. I had to look at it and sort of decipher it. So now this is almost at the touch of that, and it is incredible. But one of the things that I found really interesting, that goes back to something you mentioned at the very beginning about mindset, was I created these systems and I saw the results, which were astonishing. But then I also walked through them and I looked at the swings and, the extended periods of drawdown and the depth of it. And I mean, the systems made a lot of money over time, but I was sitting there thinking, could I really live with this drawdown on a daily basis? How's that going to play with, my emotions?
Yeah.
Will I pull the plug? And then I was working for people. So, I was trying to sell them the idea of using these systems. And I realized, that one of the problems I'm going to have when working for other people was when the system's a long way in the money, they're going to say, Steve, just take the profit. And I'm going to go, I can't, I've got to let the system play out. And when it starts losing money, they'll say, cut it out. And I did try that a little bit, where I sort of said to these people, this is how it's going to work. And they said, no, there's no way we can allow you to give all that money back. And I said, well, you have to, because you're going to get the beauty and the benefit of the system by sticking to it and almost going through a bit of a personal sacrifice, because it's going to do these periods where it's going to underperform. But that's the beauty of it, because it's going to get you back in. And I meet a lot of people that struggle with systems, that build their own systems and then really struggle with them because they then don't trust them. How are you with trusting your systems?
Again, it's just multiple years of doing it, and again, this goes back to the sort of Stoic mindset, as in I kind of build the systems and trust in the systems, and then take a step back and let them do what they need to do. And I would say it's definitely a progression of mindset to allow you to get to that sort of stage, because it's very easy to just sort of just pull the plug on anything if it's going through straight away like a tough time. And that's definitely I would say the hardest part about getting through these sort of things. I feel like I could build 101 systems and give them to loads of people, but can they emotionally handle the stagnation period, similar to what you were just saying just there previously, and allowing to trust in, essentially, you're building a robot to trade for you, which is a different sort of psychology barrier that some people have.
Yeah, you're releasing control. Now, I know the paradox of that is that you don't have control anyway, but you have the illusion of control. But you can just hit stop or get out of a trade or, increase the trade. You don't have any control at all, but you feel you do.
Yeah.
In a way, this ironically is a way to give you more control, but you have to let control to do it.
Yeah. I think one of the hardest things that I encountered, first of all, with it is obviously you have these systems running 24/7. You've got to sleep at some point.
Yes.
So having these systems running overnight, first of all, psychologically was quite tough. I would sometimes naturally get up in the middle of the night just to make sure everything's going fine. And that's where naturally you just have to trust in the system and trust what you've built. And it takes a little bit of time to get used to that. But, again, working on your mindset definitely does help you overcome those challenges, and really does. It kind of allows you to thrive a lot more within this area.
And I presume you're putting on the trade. I mean, the trades go on automatically; they're auto-executed. That's correct, isn't it?
Yeah.
Okay. Are you checking the trades to check the auto-execution and things like that? Is the slippage a part of the problem with these? Sometimes, if it was, for example, if it's a relatively illiquid product, or do you just stick to the more liquid ones?
I stick to the more liquid ones, but I have in place spread filters as well as a maximum. Like if, let's say, there was going to be quoted a sort of like price that was miles away from where I wanted to get in, then it would not take the trade. So that kind of takes away that sort of problem on the, like illiquid markets. But I tend to keep to more liquid ones 99.9% of the time, trading the majors in currencies mostly.
Okay. And my question for you now is, what sort of returns are you seeing on these systems collectively now?
Collectively? Last year was just a little over 30 with pretty small drawdown of like just about 5%, I think it was, something really small like that. It's probably for the past 3 or 4 years, I've been averaging about 25 with like sub 10% drawdown.
Yeah, that's fantastic. And how did it handle some of these periods in the last few years? Say, for example, during the Trump tariff crazy market volatility, was that beneficial for it? Was it, how did they cope with that? Was that something that, I suppose you backtest it for similar situations like that?
Yeah, I mean, like when you run a back test, you want to test it through crazy situations, which, going through, even in the past 15 years, we've been through quite a lot in terms of markets. But for the tariffs, it wasn't too bad. For the most part, it was fine. Some systems done really well because it'll anticipate increased volatility, which is good for some systems. Some systems will struggle. It's just natural to sort of build a diverse portfolio, and so then the different periods, different systems do great in. Yeah,
no, that's terrific. That's terrific. Listen, I'm mindful that we've got to start wrapping this up. It's really been interesting for me to hear you. It's also been interesting, because we have had systems people on. We had Robert Carver on a couple of years. He's written some great books. And we've had various other guests who would call themselves system traders, or even sort of semi-discretionary system traders. But hearing someone who's near the start of their journey, it feels like a journey of self-discovery for you as well as anything.
Yeah, I mean, right now it's just about constant learning. Whatever ideas or tips I can pick up from any sort of place, I'll apply. I'm hoping I'll be doing this for many, many, and many years. And the best way to keep in the game is always kind of be a student to it.
Yeah, well, listen, I hope we're giving you a little bit more exposure as well, because I know up there in the east of Scotland, I think you've already said it. You haven't got too many traders around you, and it would be nice to just step out and spend some time with them.
It would be great. It'd be great to connect with others around my area if there is any.
Yeah, which is a good actual small plug for the Society of Technical Analysts. I don't know if you're a member of them, but they're a great community for people. They also do a lot of stuff increasingly on systems. They've got an education program. on developing trading systems. So I'm going to give that a small plug for now. We normally talk about their home study course. But they're a forum where they have a lot of people similar to yourself building, developing, and sort of coming together to talk about these things.
Yeah, I definitely will look into it and join it.
Yeah. Okay. Listen, thank you once again. It's been absolutely brilliant. I hope our audience have loved it. The contact details for Blayn are on the podcast notes. Do check them out. And all we have to do now is say, Blayn, thank you very much for being a great guest.
Thanks for having me on. Really enjoyed it.
Thank you for joining us this week. We do hope you enjoyed the episode. If you want to know any more about AlphaMind and our services, please do check us out, alpha-mind.net. Thank you to our podcast sponsor, the Society of Technical Analysts, the STA. You can check them out at technicalanalysts.com. And as a reminder, listeners to this podcast can obtain a small discount on their brilliant home study course. You can find out more about that on our website, alpha-mind.net. We look forward to you joining us for future episodes, or do feel free to check out our past back catalogue of episodes on the AlphaMind Podcast.com. Have a good week.